Tuesday, February 24th. It's 11 a.m. on the East Coast, and we are live at the iConnections Global Alt Conference in South Beach, Florida. I'm with Dan Nathan, who you know, but Dan Greenhaus was floating around, and we said, Dan, come on the show.
Wait, where is Dan Greenhaus from, guy?
Solus Capital.
And that doesn't mean
he's
it's not
the
spelled, it's not spelled S-O-U-L-E-S-S. It's
No,
Solus.
it's like S-O-L-U-S.
And you
Right.
are the chief
strategist.
strategist.
Now, Dan's one of those guys, and I mean this sincerely. If you watch CNBC, when he's on, you're apt to turn the volume up because he typically says very intelligent things. So I'm glad we ran into each other today.
Thank you.
So let's start
But
on
let
the
me interrupt you real
intelligent,
quick
please.
and just say, as an avid viewer
Of what?
Market Call,
No,
you say that to a lot of people.
No,
Ooh,
first of
there
all,
it is.
that's patently
All right,
false.
but by the way, just to be really clear, we have 29 minutes on the clock
so we got to
here.
go quick.
We got to go. I mean, listen, a year ago, Guy, it was actually the last week in January when Global Alts was going on down here in Miami. They pushed it a month. There was an event that happened Sunday night into Monday, and it sent the market careening. Now, I bring that up because there are thousands of investors here at this conference. I just did a panel with some amazing investors, not exactly equity investors. You're doing a couple panels like that. And when you have all this brain power, I'm pointing, in one place, it is kind of fascinating to get all these different perspectives, right? So here we are now. Over the last week, we've seen this alternative lending space, private credit. We've seen these stocks of a thing like Blue Owl, Careen. We've seen headlines that they couldn't actually find buyers of the debt that was going to fund CoreWeave's data center in Lancaster, PA. That sent that stock down 10. You know, Blackstone and Apollo and KKR, yesterday, they were down 10%. The banks joined the party, okay? So JP Morgan hasn't bounced. It was down 4.5%. JP Morgan, talk to me for a second, Guy, about what you heard from Jamie Dimon at their investor update, because it wasn't exactly reassuring.
No, well, and listen, Dan can speak to this as well. You know, he talked about there never being one cockroach. He was concerned that there may be some, not bad actors, but people doing things that maybe they shouldn't be doing based on a number of
He
different
actually said
factors.
some of our competitors are doing dumb things, in quotes.
Yeah, yes, and maybe that's true. But I think more importantly, you know, when you hear gates go up in our world, that absolutely sends a bit of a warning flag. And then we're at a point now where it's sell first, ask questions later. And a name like IBM, which by the way had been on a rocket ship, was down. Yesterday was the worst day it had Dan Greenhaus in 25 years. So there's clearly something going on. And it might be a one-day event. Today the market's bouncing a little bit, and you know people get very comfortable saying it's a 1, 2, 3 day type of thing. And that's been the right course of action. Does anything feel different to you?
Well, it does feel different, but I think the rolling nature of the AI dislocation, which we've all talked about on air and off for weeks now, I think there's a missing component to that conversation. And what I mean by that is the fact that IBM can have its worst day in 30 years or whatever, and we move from cybersecurity to legal, to insurance, et cetera, speaks to the lack of knowledge that everyone has regarding what this is actually going to look like in 1 year, 3 years, 5 years.
Why do you say that really quickly? Because yesterday, the AI trade, if you will, got hit really hard. It was in the Wall Street Journal, it was in Bloomberg, it was CNBC, a viral post by a Substacker that no one's ever heard of before. And the truth is about it, he was basically doing this thought experiment that this is June 2028, and here's what a lot of these industries look like. Here's what some of these models have done. And you know, like, so I just think lack of knowledge, no one knows what's going to happen in the future, but right now, the way we're looking at the financialized nature of the AI build, that should be getting people's antennas up. I just mentioned the Blue Owl and CoreWeave thing, right? You know, there's so many different examples right now that I just don't, no one knows where it's going to be, but the price action right now and some of the early beneficiaries in the stock market are saying something different, Dan.
Well, hold on. I would argue the opposite, that I think it's sort of reinforcing my point. And what I mean by that is, while we can argue about whether anyone knew who Citrini was before yesterday or not.
Did you know? I'm being serious.
I 100% know.
Oh, you did?
I would
just give us a background then, because
I don't know him.
Had you ever heard of it? I had not heard of it.
Okay, so I don't know him. I don't know the research service, but I feel like if you were active on Twitter, Citrini is a name that has popped up repeatedly. So that is largely the extent of my knowledge of him and the service. I have not read the note as of yet because I've been here. But my point about the dislocation is, and I was leading up to after my first point, the second point was going to be, that a thought experiment by a, we'll say, relatively unknown actor in the financial markets could garner such widespread notoriety speaks to the fact that no one has a firm understanding of what this is going to look like. And so when someone comes out, I think he has a few 100,000 followers on Twitter, whatever it might be, with some plausible scenario where it's not just cash flows are dislocated, but the entire economy is disintermediated, everyone goes, okay, sell everything. And again, if I had a firm handle on how much LegalZoom was going to be impacted, the insurance companies, I wouldn't react as violently as I being the royal market.
But there's so many things that are intertwined, so many narratives that have been driving performance in the market, and they're becoming smashed together. And here's an example of the IBM. You know, Anthropic comes out with a paper, you know, this is Sunday night, okay, talking about how COBOL, C-O-B-O-L, which is like the primary programming language of the last 50 years, that infrastructure, like, you know, mainframe and all this stuff has been built on it. And he said something really interesting about it. All the knowledge that was basically used to create that, coding or programming is gone. All the people have left. All the people who have designed it. So there hasn't been any innovation on it. So then when you have a company like Anthropic come out with actually an alternative way to run, you know what I mean, this sort of stuff, it shoot first, ask questions later, but there's no reason to believe that that thought is not going to play itself out over the next, you know what I mean? And so, and IBM was one of these head scratchers the last 5 years. This is not an innovative company, guy.
So Dan started with like these rolling series, and that's really exactly what's going on. You know, it's finding its way across now a swath of industries. And you know, it's something that came up yesterday on Fast Money, and this is interesting. You know, we're not making parallels to 08, 09. But some things are similar. You know, back then, banks lending to banks and that whole. Now you see the announcement overnight or this morning, AMD doing a deal with Facebook. They're giving up potentially 20% of their company in the form of warrants, which seems extraordinary. And the question that David Faber asked Lisa Su was, a lot of people will say the reason why you're doing this is so they will buy your chips. And it's this sort of quid pro quo. Maybe there's nothing wrong with that, I don't know. But the circular nature of what's going on continues to sort of rear its head. For better or for worse, by the way? Probably
for worse. And I think where I have disagreed with people on air and off is just the immediacy of the dislocation. And getting back to the Citrini piece, I have two pushbacks, and we'll use IBM and then employment. Just with respect to IBM, Sarah Eisen just earlier today spoke with, I don't remember who, I apologize, someone senior at IBM who said, I don't know, obviously, I don't know what all the fuss is about. We're already doing this sort of stuff internally. So they're trying, as it sounded to me very quickly, to build a moat against exactly this type of thing coming in from outside. Now, again, this is internal IBM commentary. Of course, they're going to take that type of a position. But my first pushback on this is the idea that a lot of these large companies are not going to do something to try to prevent the worst case outcomes from coming to pass. And then secondly, the pushback, which I noted on Closing Bell the other day, is the worst case outcomes, the widespread white collar job losses, the economic downturn, the institution of universal basic income on the part. If anyone thinks the US government is going to allow millions, let alone tens of millions of white-collar workers, anyone really, but white-collar workers be put out of work by some machine, is living in a dream.
Okay, so stop there because I agree with you. But is that, I guess the pushback to that is that genie out of the bottle? Do they even have the ability to stop it at this point?
Well, listen, the short answer is I don't know. I'm not afraid to say that. But what I would also say about the conversation we're having right now, about the immediacy, is, let's use Bitcoin as an example. Bitcoin in 2012, the main, yes, there was we want to get our money, secrecy, and we don't want the government overseeing us, but a lot of it was
censorship resistance.
Censorship resistance, sure, but a lot of the pitch was going to be, this is money, this is how you're going to pay for things. Well, here we are 10 years later, I still can't buy a pizza with Bitcoin. Look at, it took Stripe and Square and those sorts of payments, years, those sorts of technologies, years to be instituted in a widespread scale. It's only recently now when I go to a restaurant, they'll bring over a digital receiver to swipe my credit card. The idea that this is going to be, I do agree with the people saying the Darios of the world who are
CEO of Anthropic,
who are incentivized to come out. This is the Ben Affleck argument, and prop up the value
Yeah,
mechanism.
but you're a really smart guy, and you do have a soul, regardless of how we started this sort of thing.
SOLUS.
The innovation that is happening on a daily basis, and we all had a front row seat for what was going on in the late 90s with the internet, okay? The adoption rate of this technology, and in my own use, on a daily basis, and people much smarter than me that are building real things on top of these LLMs and using the codecs, whether it's GPT or the offering from, it's staggering. And I think this is a different paradigm for for all intents and purposes. Now, the one thing I want to go back to what we just talked about, Meta, an order to AMD for $100 billion of chips. This is a company that has not been able to keep pace with almost every technology other than catching up with Intel on CPUs at one point. Or yes, AMD, okay? And then Intel faltered. These guys have not been able to deliver the performance. And, the list goes on and on, okay? I believe it's still circular in a way. So Meta is looking for a second source from Nvidia. When you give a bullshit $100 billion, they will never ever buy $100 billion worth of chips from AMD. Is that fair?
I don't know the answer to that, but I think you can make the argument that that is a 50-50 proposition.
So then OpenAI, remember they gave them a huge order,
Yeah.
They got warrants, okay, it's all part of the same shit. But what's really important, going back to the Blue Owl CoreWeave thing, where they're not buyers of their debt because it's below investment grade, okay? So go to Meta. Meta's got great credit. You know what I mean? Why did they go to Blue Owl to raise the money to build a data center in Louisiana,
Didn't want to have
get it
on
off their
there.
balance
That's right.
sheet? Okay, so it's getting increasingly financialized. It's getting increasingly circular. I can't keep track of it. Can you keep track of all
Every
this
once
shit
in a while,
that's going
Dan
on?
knows this. Every once in a while, people put on Twitter or whatever publication that diagram
Bloomberg's got a
that's out
great
there,
one, actually.
and it grows seemingly each day. And again, maybe there's nothing wrong with it. Maybe that's just the way business is going to be done. But it definitely makes you raise an eyebrow that there's a lot of, I'm going to give you this in return.
Yeah.
You're going to buy this from me, and it works until somebody says, you know what, not so fast.
That's the important point, though, and this is the point that I've been making on air for quite some time now. Listen, we're an asset manager. We're a multi-billion-dollar hedge fund.
Long only, right? Or no?
No.
Okay.
Multi-strat.
We're cross-asset, up and down the capital
Stop
structure,
bragging,
long,
dude.
short.
Yeah.
So I'm conscious of this narrative, even if we aren't technology investors, as I've noted for years on CNBC. But the point you just made there is, I don't know if it's a problem, maybe it will. We have to separate, we as traders, we as investors, have to separate out the very high likelihood that there is malinvestment, that there's a circular nature of propping each other up. That all of these narratives can be very real. We have to separate that out from the immediacy of whether that's going to come to pass in the next 3 months, 6 months, 9 months, whatever it might be, from whatever starting point we're talking about.
Now, with that said, and I agree with you, is there a valuation cushion in the market? This goes back to the valuation conversations we have. Is there a valuation cushion in the market that could support one of these rungs or one of these stories going? Because you look at yesterday and suggest no, but that's a one-day event. I get it, but is valuation at a level now where if something bad were to happen, there's really no cushion for this entire thing?
No, I don't. I think there's Yes, yeah. It is perfectly. Listen, we've had some version of the conversation. What's more important to markets, the Federal Reserve or AI? The AI or Federal Reserve? And there's no real answer. I have come down on the side of AI, despite being a macro person, because it's not just Nvidia and Broadcom and AMD. It's GE Vernova, it's Amphenol, and all the way on down. And so the market has been completely revamped in favor of this one trade that goes way beyond just technology and comm services. So if something were to falter there, Nvidia is not going to be the one to tell you, probably. It will be Facebook or something like that. But if something were to falter there, I don't even think the valuations, we've all seen bear markets in our lifetime. Yeah. It does not help when you start for the broad market 20 times forward.
That's why I'm bringing that up.
Yeah.
I mean, because if we were trading in the 17 and a half, you have a little bit of cushion.
Even then, why wouldn't you fall to 13 or 12
Which
times?
we've seen that before. Is there a scenario that you've thought of where that could happen? Like, what is the scenario? Is it an unemployment situation? Is it some existential thing that none of us can talk about? I mean, I think it comes down sort of on just the economy in general, but more so just on the employment picture.
Well,
which, by the way, looks fine.
Looks fine. So I'll say two things very quickly. The first, on the employment side of things, I have a differentiated view. Stock prices lead unemployment, not unemployment leads stock prices.
By the way, I agree with that.
Yeah. So I think people who are watching, well, when the unemployment rate starts going up, no. Management reacts to stock price declines.
I 100% agree with that.
And you just saw this the other day. Someone's stock went down and they put a hiring freeze on. I'm blanking on who it was. But the other thing I want to...
Klarna, maybe, or no?
I don't remember, I apologize. But the other thing is, our age is going to be very beneficial this time around because we saw, as you mentioned, with the late 90s. And what I mean by that is, I've done a ton of work and research on the late 90s to remind myself. I came of age in the later 90s, so I missed some of the earlier parts. But what escapes a lot of people, I think, is the fact that we were talking about a bubble in stocks in 95, in 96, in 97, in 98. And then 99 things went haywire, and you actually had an end. So what I've spent a lot of time on is, okay, well, what actually ended it? And it was profit warnings, and the, I think it was Sprint MCI merger after a huge wave of telecom consolidation. The Sprint MCI merger was blocked by the DOJ. And then the demand slowed. Lucent came out, Sprint came out, Sun Micro came out and gave profit warnings. Some indication that the incredible investment cycle that we had undergone for many, many years was now slowing down. Wasn't a decline, but was a slowdown.
So you're talking to Nvidia and you mentioned Sun Microsystems. So Scott McNealy, you can make the argument, he started the whole thing and he ended the whole thing.
Yeah.
Remember, he came out and he did a whole math problem as to why the math.
By the way,
said,
it was really cute.
It.
He was talking about 10 times sales.
Oh yeah.
Remember
but
that?
you
10
remember,
times sales.
and he was talking about the absurdity
Yeah.
of what the market was doing, and that I only bring that up in the context of Nvidia. Is there a chance that we get that from?
All right, but let's just talk about this. So tomorrow after.
Oh, whoa, wait, hold on. This is unbelievable.
Wait, who is this?
Vinny is here.
Yeah.
What an unexpected
my
surprise.
Man. How are
And
you?
you know what? Just because we thought you might come, we brought a little
Oh,
microphone.
really?
And we'll get a chair
All right,
over
can
here in
we-
a second, too.
Can we get a proper introduction?
Vincent Daniel, ladies and gentlemen, of Big Short fame.
And Seawolf.
Seawolf Capital.
Okay, we gotta
whose
throw that in
returns
there.
have been outstanding over the last few
Outstanding.
years. His partner, Porter Collins, is at some
Don't dox him.
crew
Don't
event
dox him.
in Maine or something.
He's doing rowing stuff.
All right, Vinny,
course
we
he
want to
is.
get your take on this because, oh, look at this.
We got a chair.
for you.
Come
How
out and
cool
see.
is that?
Look at that. That's the way we roll here.
So,
All right.
So Dan Greenhaus.
I know
just
Dan.
said- no, I know you. You guys go back.
Woodbury's finest.
But Woodbury, that's New York people, okay? He just said something about, well, you know, the AI trade we were talking about, and it's like, I'm not sure if it's going to be Nvidia that tells us this or whatever. All right, so that's really convenient because Nvidia reports tomorrow after the close. I think for like the last 8 quarters, Guy, you and I put a really important emphasis on what Nvidia has to say. They haven't seen much to deter what's going on. But on a week like this, where AMD gets a $100 billion order, right? You know, that sort of thing. I just think it's important to recall your comment about valuation. Fiscal 27, this is this year right here. NVIDIA is supposed to grow earnings and sales 60%. 60% earnings and sales. Gross margins are expected to go from 71.5% to 74%, okay? The stock trades at 24.5 times. What is that? Like explain that for a second. If the market is so expensive, but this thing is trading on a PE to growth, you can do the math on that. How do you square that? And is this going to be the one? Because the stock's gone sideways for 6 months.
The way I square it is that people are probably rightfully expecting that at some point in the near future, it's 2-3 years from now, the growth rate's not going to be where it is. The gross margins aren't going to be where it is. So it's more expensive if you look out perhaps in 28, 29. I'm not saying that's going to happen, but the probability of that happening is probably higher. And so as a result, it looks like you're getting NVIDIA at a discount because you're right. Those growth metrics are great. You're not paying a lot, but maybe 28 and 29 is not going to be as
So here's my question to Dan Greenhaus. It comes down to a margin story, because if margins in perpetuity are in the 70s, low 70s, then all this math makes sense. But if competition comes in whatever form that it comes in, and gross margins go from mid-70s, let's say into the 50s, all of a sudden that valuation that seemed reasonable gets pretty expensive. And you know, historically, when you start to see a deterioration of margins, it never really goes back the other way.
Yeah, that's exactly right. The problem to bridge the two comments is we've worried about that about Nvidia for
100%.
several years now, and they've,
Can you agree that the landscape has changed so dramatically because you have, Nvidia invested in Intel? Just think about that, right? And they
I
want
think they
their
got a tap on the
manufacturing
shoulder.
4 GPUs.
That one, I
but that's
think,
fine.
was-
But my point is that you have OpenAI giving orders to, AMD. My point is, Dan, and then you have all the custom silicon, Broadcom, and all this sort of stuff. You saw like Google with their TPUs. Why do you think Google has traded so well? It's not just that Gemini has, caught up to ChatGPT. It's also a semi-story. And I'm sorry to cut you off. It's our show. Guy has been saying this for a year. Jensen Huang, there's something there. It's purely anecdotal. Explain that. There's nothing we can put our finger on.
Again, genius.
Yep.
There are a lot of geniuses out there, but there's that Shakespeare thing. The lady protests too much, me think, right? And doth protest too much. And he's out there all the time, seemingly out there on a weekly basis, if not more often, talking about the company and talking about their growth, which may be fine, but I only bring that up in the context of if you have that type of moat, you don't really need to necessarily talk about it. Is that fair, or is that just a different world
I'm reading
now?
The Thinking Machine right now, which I have not read, which is the book about Jensen and building Nvidia. And I'm no expert, but it seems like that's who he is from the start.
Yeah.
Also, apparently, quite a yeller, which I am
Really?
Yes. Read the book. Not that I get any proceeds from it, although I should. But yeah, apparently he's a very driven guy, if you will. But I want to get back to the point about the margins, et cetera, and how we've been talking about this for years, and everything is different. My pinned tweet on Twitter is if you keep talking, I forget exactly what it is.
I'll
even
find
though
it for you, but
it's
talk.
my tweet. If you keep talking about a market top being the market top, and it's not I'm screwing it up, but it's basically how many times have we called a market top?
That was your pinned tweet?
Yeah, I think it's quite good.
I think it's about as
Of course you
Okay,
think
can
it's
I-
quite
can I-
good.
Yes. Yeah.
Can you give the real?
I'm
I'm going to read it. I'm reading, so I apologize. If people keep pointing to things as an obvious sign of a market top, eventually one of those will coincide with a market top, and so many are going to say, see, I told you that was the market top. Ignoring the 50 other signs of a market top, we're not coincident with the market top.
That is the worst tweet I've
Okay,
ever read.
now that's-
Can you
that's
put
a
in
lot of
ChatGPT
market top
and
stuff.
Mine is
Grok
like
and
Mets
say,
Jets
make it
fan
more
value guy.
concise?
Just to be clear,
was
Grok
not.
could never write a tweet.
No.
You could ask
Magical
it to
is
be
that.
more concise.
But my point, I don't want it to be concise. That's the
That's the
point.
point.
So very quickly, the point I'm making there in this context is the last time he's everywhere. Remember when he signed some woman's
Chest.
upper
You can
chest
say it.
area, if you will?
her breast.
I didn't see. I don't know anything about
her
this.
breast.
I only see people for who they are as a person. But there was a wild outcry. This has to be the top. He's a rock star. This has happened repeatedly. They have defied convention over and over again. There's been lots of research done. One comes to mind by David Costin and my friend Ben Snyder over at Goldman Sachs about how historically most companies do not grow into their valuation. And so for a lot of these companies, Palantir, et cetera, history suggests they do not actually grow into it. But Nvidia, to Dan's point, has not really ever been particularly expensive in a traditional sense.
Only
That's
on a
not-
price to sales. Only on a price
Well,
to
Nvidia's got-
sales.
well,
Well,
yeah.
even
No,
on
he's right.
Yeah.
Like, look, I'm a value investor in Hawk,
Yeah.
right? 24 times for that doesn't scare me. I don't own Nvidia.
Yeah, but to your point, the decel expectation for fiscal 28, though, so the out year is 30%. So it goes from 60 to 30.
Correct.
To your point.
So, and I'm not really a peg guy because we were joking around. We don't put terminal multiples on 2035 earnings.
Right.
Right. Like that's just not what we do. We're lucky to put an 8 times EV/EBITDA multiple.
But
on
admittedly,
forward.
you're looking at a different universe. Traditionally, you're looking at a different universe of
Traditionally,
stocks.
but not anymore. But when we look at, when we looked at the software companies post deluge, right? And we said, shit, it's still not cheap, right? And how in the world, and we couldn't understand how you could expect 15% revenue growth for the next 10 years and then slap a 25 EV/EBITDA. It's not what we do.
Yeah.
But as it gets closer to us, it gets more interesting to look at. I don't know. To me, Nvidia is interesting, but it's never enough for me to buy it.
All right, I have one comment, and we can move on from Nvidia because I'd love to get your take on what's going on in private credit and how it's kind of moved around a little bit. So, Jensen Huang went on with Scott Wapner, our good friend. I want to say the Friday before the Super Bowl. So was that 2 weeks ago, whatever the hell it was, and he gets out of his Escalade or whatever to go do the show, and I don't know if I'm supposed to be saying this, but somebody at CNBC told me this. He gets out, and the person goes, "Hey, where's your leather jacket?" He's wearing a jacket. "Where's your leather jacket? Your signature?" He goes, "Oh, I got it right here." Takes off the jacket that he's wearing and puts, I didn't tell you this, and puts on his leather jacket. What does that say to you, Guy?
No, I mean, you become the character of yourself. But again, as Dan said, there's nothing inherently wrong with any of that. I mean, history has sort of championed people.
Well, just go to his pinned tweet, and you can learn everything you need to know. All right, Vinny, give it to us, because what do we have, 5.5 minutes here? Like, give us the 411 of the price action over the last, couple weeks or something?
Like, when you see something like yesterday, which is clearly, we haven't had a day like that. We were mentioning IBM, the worst day it's had in 25 years. Yesterday was clearly a sell first, ask questions later, risk off. Bitcoin continues to trade poorly. Like, put it all together, and what is it telling you, if anything?
Well, what it's telling me is we've all been euphoric on AI and the build out and the CapEx, but very few are asking, well, what if it's successful? What happens?
Right.
Right? And, AI is not there just to create some interesting memes and better memes and search engines. The way I think about it, and this was written yesterday, it was a very controversial piece, is, the intent and the goal is to wipe out 20 to 30% of the workforce. And what happens if that is the case?
What happens if that is the case?
Well, look, I run too bearish, right? Well, Dan will probably tell me there's something called creative destruction.
This Dan?
Yes.
Okay.
Look,
I've been telling him for 20 years.
Right. And I would counter him and say your creative destruction was in the form of government jobs. And that's why we blew out the fiscal deficit, right? So, and you'll point to healthcare and I'll be like, that's a government job. Medicare and Medicaid is paying for that. If all of a sudden you're creating a machine that is learning quicker than humans, that is going to reduce employment, I think I think the last 2-3 weeks, people are doing the what ifs, right? And the what ifs are, what happens to these companies in our old neck of the woods? What happens to insurance brokers? What happens to wealth managers? What happens to all of these people that have been charging fees? If all of a sudden a machine can do it quicker, better, and cheaper, that creates a lot of, that reduces terminal multiples on a lot of companies that had very high terminal multiples.
So success, the way you just described it, is potential failure, potential detriment to the economy, to the employment picture. I mean, productivity goes through the roof.
Right.
Unemployment goes to what? Where could we see unemployment?
I think he said 10% in his piece.
It's definitely
and he's making
uncertainty.
the same point the guy just made. I know, what I mean?
Yeah.
It was
And
really interesting.
the interesting thing about the guy who did it yesterday, Citrini, this has been spoken about by others.
Gary Marcus has been pretty good on the Substack.
Others, this went viral. And for whatever reason, I think it went viral after the fact that the software companies, after discoveries of Claude, I think it's just starting to feed on itself. Now, I don't know. We'll see how far this goes.
Great term. You're the macro guy. He used the term ghost GDP.
Yeah.
Yes.
Which I think is fascinating. Like that's a good term.
I don't know what it means.
So the ghost GDP argument, what?
No, I'm just saying he doesn't know what it means. You explain it, please.
He's basically saying traditionally, and this is something that we wrestled with last year, that GDP was pretty good, job growth not so good. So if all this investment is creating a jobless expansion, if you will, you're getting ghost GDP. And it sort of gets back to my point before he joined about the government's never going to let 10 million people lose their jobs or whatever it might be. So just very quickly about Citrini, I've made this point before and I will make it again. One of the biggest, worst things to happen to our industry is Nouriel Roubini getting famous. And what I mean by that is post-GFC.
I thought you were going to say Fast Money becoming a show, but okay, that too.
Well, Fast Money not making me a full-time cast member, huge mistake. But that said, what I mean by no disrespect to Nouriel Roubini, but I mean the doomsaying post-GFC has never gone away.
Right.
It's been here for years and years and years and years and years. And even to this day, with the Citrini piece, people are just attracted to a negative narrative.
That's fair.
Way more than they are. You don't click on the headline that says everything's okay, go back to work.
But I know you understand this. Like the scars from that period of time run deep for a lot of people.
Donald Trump is not president if not for 2008, et cetera.
I think the more
Probably
interesting.
true.
I think the more interesting question about all of this is some of these doomsayers I know fairly well, right? Like we were part of the whole Big Short thing. I asked the question, well, why haven't they been right? Right? And the amount of plates that need to be spun underneath the water to keep this going, right? All the money printing, all the volatility reduction that is required to keep it going is one of the reasons why it never comes to fruition.
You and I sat in your office dozens of times having this exact same conversation. And what did I say every time? Most likely, the plates are going to keep spinning.
Good, right.
And
the way we have expressed it, rather than beating our head up and down against the wall trying to short this thing, is I buy gold. Because if you're going to debase the currency, if you're going to do what you're doing to the dollar, I'll just buy gold.
And two things can be true at once. The plates can keep spinning, and you can make money in gold.
Well, it's like, but even that woman that plays at the NBA games, that gets on her unicycle and juggles all that shit, every once in a while she drops the plate too.
Oof.
With that, we have to do this again.
Yeah, we do. But hold on one second. Vinny, where can people find you on the Substack?
Stop.
Come on. It's you. It's Porter. It's
Porter,
Danny.
Danny, and I. We have done a Substack combined with the podcast, and probably the most interesting thing is our own community chat room
On Discord.
On Discord, correct. It's called "What Are We Doing on the Trading Desk." We're on Twitter, but look us up, and we try to write. I try to write
Dude,
periodically.
it's killer, by the way. You guys have 6,500 in a very short period of time subscribers to their
amazing.
Substack. Hopefully one day one of your Substacks will go viral.
If not today. Dan Greenhaus, Vincent Daniel. Tomorrow, no market call because we're traveling.
We'll
be back on Thursday. But again, thanks, Dan. Thanks, Vinny.
guys.
Thank you. We'll see you soon, folks.